Welcome to the Mastering Commercial Real Estate Podcast, the show where we dive deep with top investors, operators, and industry pros to uncover how they're building wealth and creating real impact through commercial real estate. I'm your host, Cory Mortensen, capital raiser, commercial investor, and founder of 19 Holdings. Whether you're just getting started or looking to level up, this podcast is your go-to for real insights and actionable strategies. If you enjoyed the show, please hit that like button, leave a quick review, and share it with someone who should be listening. If you've got feedback or ideas to improve the show, I'm always open and I want to make this better for all you listeners. If you're ready to start building wealth passively through commercial real estate, visit 19holdings.com. That's ONE-9 Holdings to learn more and join our investor list. Enjoy this episode. Hey everybody, and welcome to the next episode of the Mastering Commercial Real Estate Podcast. I'm your host, Cory Mortensen, and today I'm joined by Alex Burch, a multifamily investor, entrepreneur, and the co-founder of Veritas Equity Partners. Based in Washington State, Alex has scaled his portfolio from a single 8-unit property into a $50 million syndication business focused on value-add apartment deals. He's known for his data-driven approach, strong investor relationships, and a local-first strategy that's delivered consistent returns in the Pacific Northwest. In this episode, we'll dive into how Alex went from tech startups to full-time real estate, the principles behind his investment philosophy, and how he creates value for both residents and investors. Alex, thank you so much for being on today. Let's get it started and just introduce yourself to the listeners. Just bring us up to speed on, how you got started in real estate and tech, and bring us up to date to where you are now.
Yeah, no, for sure. So I have been investing in apartment deals out here. So in the Seattle, Washington area, we don't actually buy in the city of Seattle, but the surrounding markets in Washington for about 15 years now, which is kind of sounds like a lot longer than it feels like, to be honest. But I got in when I was young. I was 21, 22. I was also selling software, working in tech, and I just kind of scaled it on my own for 13 years, really. So it was a good run. I was doing both things. I had two separate lives. I was buying apartment deals on the side and then working a W-2 job. And then it just got to a place a couple years ago where I decided to go all in on the real estate business and started raising investor capital and scaling the thing that I had kind of learned some hard lessons along the way with my own money and went from there. So it's been a fun ride, but yeah, happy to be here.
Yeah. So tell us about, the jump, the skills that you were developing in your tech career, because that was tech sales, correct?
Yeah, correct. Exactly. Building out regions for small companies. And then my last gig was AWS, just running a region out there. So small company to one of the biggest, but yes.
And so what brought the attention from that area, that industry that you were in and having success in, and turning that into an interest and a business in real estate? And we'll get into how you were juggling both of those later, but tell us how you got interested in real estate to begin with while you were in that.
Yeah, so I didn't grow up in the space at all. Nobody in my family was in it. I was just kind of deeply curious about the world of money. So it was more just me trying to understand what people were doing that seemed like they lived really cool lives and had some control of their schedule. And so probably starting in high school, I was just asking everybody I could that appeared to have resources what they did or what they would do if they could go back in time, those types of questions. And it just sort of triangulated pretty quickly to this apartment investing game. And that to me also felt so out of reach. I was like, I don't quite understand how you would buy an apartment building, but it just became, I don't want to say obsession, but read a bunch of books. YouTube was it wasn't as prevalent as it is now, but there were videos and plenty of resources you could go chase down. So I just started kind of hunting mentors and people in the game and learning. And then when I was young, I was, part of a cool little company that ended up getting bought out along with, again, not really having any money or things in the past. I just came into a little bit of cash, dumped it all into an apartment deal and just self-managed it while I was selling software. So yeah, those two worlds, I think there were a lot of things that helped both, right? I mean, like selling is selling, people are people, getting used to dealing with people, all that stuff is no different across either side. But yeah, also very different businesses too. So it was nice to be able to have both.
And so with your skill set, what was kind of the number one thing that you would say is your biggest strength in either when you were getting started in tech and that translated into the real estate, or you can even start from what it was then to what it is now? Has that changed? What your strengths might have been?
Yeah. I think a couple things. I think characteristic wise and then strength wise, maybe we could silo it off. So, being in sales, you learn rejection is like just part of the game, So there's a lot of like, I'm gonna go try this, I'm gonna go do this. I'm probably nothing's gonna come from it. So you kind of get used to doing work and then not necessarily receiving anything for every little bit of work that you do. I think that echoes huge, into this apartment game. Because think how many deals we look at. Think how many conversations happen. Think how many cycles we go through. Not all of them work, not all of them fruit, but when they do, it's great. So there's that I think was just kind of like a good muscle to learn rejection and then doing things without getting instant gratification, those types of things. And then the obvious, the people. If you're used to dealing with people, all different kinds of people, and then creating relationships with people, I think that helps you in every piece of your life, regardless of what business you're in or whatever. But particularly the real estate business is so people focused, right? And if you're not people focused, you're probably not doing it well.
Big time. And I couldn't agree more with that. The personal capital is almost more important than the actual capital that this industry demands. Being able to leverage relationships and build those networks up so that you can accomplish the goals that you want to, because this is not a solo industry. You can't go very far. You can get some stuff done on your own, but it's going to be extremely difficult. You're going to burn yourself out, and it's not going to be fun. And I think, just from us talking before on the pre-show, you and I are both, very good with people, and that it brings us energy to have good people in our team, and it just makes everything easier. So when you're building a team and you're networking and finding people to work with, what are some of the things that you want to look for? What are some of the red flags in the industry that
Yeah.
that people need to stay away from?
Yeah. So one kind of beautiful comparison between tech and real estate that I figured out when when we scaled Veritas, and that's what we've been after the last year and a half, is there is a huge difference between the base level of knowledge that you need to be successful, in something like kind of a high tech environment. You do need some knowledge, like you can't just come in there cold and be a relationship person and, have success at certain levels in that level of the software game. Real estate, though, I kind of connected quickly, like, hey, like I've learned all these lessons the hard way, like buying deals, managing deals, like quite frankly, getting a lot of scars all around, right? Like from making mistakes and learning them that way. But I can translate those mistakes not only to like our investors, but to new members of our team. So everybody that I partner with now, it's almost like I'm looking for people that aren't already in the real estate game, honestly. Like it's people that are wired similarly, it's people that have the same values, it's people that, their ethical barometer is aligned with mine. And as long as you have those base level, your EQ is super high, you love people, you love dealing with people, you've got good hustle. It's like, the apartment game's not that complex. So at the end of the day, that is a really cool part about this. So, I mean, even down to our name, Veritas, it's truth, it's integrity, it's ethics, it's all of these things. So I look for like who the person is at their core first, and then obviously they've got to have interest in the space. So it's not like it's completely not important. But at the end of the day, we're rolling with people with the same kind of base level foundational stuff, and then I'll teach them the real estate stuff. I'm not too worried about that.
And you've been in the industry for what, about a decade now?
Yeah, first deal I got into was 2010, so 14, 15 years. Yeah.
Yeah, so I'm sure you've had your fair share of learning experiences. Did you do any partnerships or anything? Any type of co-investments with other investors? That did all of those go well? Was there any story where you learned a lesson from a partnership or anything like that?
Yeah, so those first like 13 years, it really was just my own money and a few deals with really close friends and family members. That was it. So like I wasn't out there raising money. I quite frankly wasn't out there pursuing the business. Like I was just trying to pursue kind of generational wealth for myself, my future family, all of these things, right? And I wasn't thinking of it like, hey, this could be like a full-time thing for me. I just was truly looking at it as like certainly not passive, but something I was doing on the side. And then the portfolio got to a place where it was like 35 million dollars under management, and I was still working in tech, and then some mentors were kind of like, hey, you got to go bigger with this. But that was the first kind of level of questioning that I had, was like, what have you guys learned? Because these guys have 500 plus $1 million funds, and they've been in the game a long time. And the universal message was around partnership. Like that was the number one focus. It wasn't like the thesis or the deals, or like we obviously talk about that stuff, but it was more around the people and who you partner with. And that was their biggest lessons that they were pushing and pushing and pushing on me, was like their only regrets. It wasn't deals. I mean, some deals don't go as good as you think. It wasn't not trying things or trying things. It was literally the partnership part. So I have really partnered with very few people. Like we're really, really selective in terms of who we partner with. And, coming up in the tech game and scaling out some of these sales teams and things like that, I did get some good lessons in terms of like organizational management and like how to be really super crystal clear with people in terms of like expectations and lanes and who's in charge of what and all of those things. And so I've been really fortunate and that I haven't had that many even hard conversations, let alone I haven't had any partnerships like implode or anything like that. But I also am like wildly choosy in terms of who we get in bed with.
Yeah, you've done a lot of the front loading on that to make sure that isn't even an option and to lower that risk. And you mentioned you learned a lot of lessons about how to be crystal clear with people. What are some of those insights? What are some of those lessons for those people that are looking for some of those skills?
Yeah, it's been a really fun experience the last, year and a half because, again, it took me 13 years to build up like a 30, $35 million stack. And then in the last year, quite frankly, we've added about 20 million to that same stack. And so it's like the scale rate has been a lot different, but it feels a lot like really contained. I'm no longer in tech anymore. I'm just focused on this. Like it's been great. We have built out a bit of a team now. We've got a lot more partners working in the business. And I think for me, at least, it just comes down to being like wildly clear with people about, expectations, like what they're in charge of, what I don't want to be in charge of, what I don't have to like watch over their shoulder for, and then trying to set people up for success. Like I don't want to throw somebody into the deep end if they're not ready, because that's just going to screw us all, right? So I think it's just really that kind of simple as like us being super thoughtful about like what are pieces of this that we could delegate, who could we potentially slot in that not only would do the job well but like it and like want to grow in that, and then get more responsibility over time, and just be really patient with like putting the right people in.
And you've mentioned the mentors quite a bit already. I can't imagine a more pivotal piece of somebody's business to allow people to grow and skip a lot of the learning curves without having to do it themselves. I think it's the most powerful aspect of any business person is their ability to be able to source and build relationships with mentors. And it's difficult and it's not a straightforward path and there's not a
Mhm.
real textbook or playbook for it. For you and your story with your mentor or mentors, how did you find your first mentor? How many mentors do you have now? Kind of dive into the nitty gritty on that aspect. I'm really curious.
Yeah, so I've always been huge into this. Just at first, I think in my head, it made sense just to get the playbook from somebody that's been down the road, right? So like it was literally just as simple as like, I've never done this. I have no clue what the heck I'm doing. I mean, it was even when I was young and I was like, I don't know what I want to do for a career. Do I want to be a lawyer? Do I want to be a doctor? Do I want to be a business person? Like, I don't even know what all those things really mean. So I would just pursue people in the space and ask questions and kind of try to become friends, right? So I don't know how many hundreds of coffees that I ask people out to, and especially when I was younger, but and now I'm still doing that. It's just, you get to a certain place where finding mentors, it just gets, the pool is smaller, right? Like once you start having a little bit of success yourself. Um, but I kind of think of mentors as like siloed. So, I think a lot of people have this perception that you need to find like a like a Yoda or something that's going to like, be your guide for every aspect of your life. And if this one person has this one part of their life that you don't agree with or don't think they're doing that well in, that the rest of it doesn't count. I've always pursued like, hey, if I want to pursue this apartment business, like who's built a big apartment business, like I want to meet with those people. And maybe, maybe their family life isn't something that I would emulate or, whatever, but and that doesn't really truly matter to me. Like as long as they're good human beings and they're doing their best and they're willing to teach me and be vulnerable and like tell me what they learned and gone down the path. So I think of that in terms of, you know, have you been there and done that? Are you where I potentially want to be? And then, let's just basically create like a friendship. So especially when I was in my early 20s, I was just trying to like provide value and do something that made me stand out from everybody else that was asking for these people's time, because they're all busy and they all have plenty of people that would love to spend time with them. And then I think it was just, especially when you're a little bit younger or you're newer or something, it's like showing that you've got the energy and the desire to do everything correctly and actually absorb their teachings and like go do them and then come back with, reports around like, hey, I tried this, it didn't work. What the heck? Like just making it fun for them too. a lot of these people are pumped to like find people that are, happy and, like motivated and excited to go build something and they just want to help. So it's not that tough if you just get out there and ask.
Yeah, I think it's very underestimated. I think it's just a fear of the unknown if you're, especially when you're young, or really, it doesn't really matter what age you are, but trying to go out and find a mentor, especially if you haven't had one before, that can be kind of a daunting task because, you feel like, oh, why would they talk to me? You kind of have, a little bit of fear in that. And so what were some of the things that you did to stand out and to get these meetings? I mean, it just is a kind of a rate. How many people out of total, like percentage wise, agreed to meet you for coffee and stuck around and things like that? But what were some of the things that you did to stand out and get these meetings?
I think it's funny because when I look back to myself, like when I was like 18, 19, 20, 21, like I didn't really know anything. So I was just asking, like, if you had a nice car, I just assumed, hey, you probably got some money, like you're doing something right. So let's meet. So I was asking everybody. And that's what I mean. I was probably doing 15 coffees a week or something, with like random people that I just assumed were like successful on some level, and I just wanted to understand it. Um, so my bar was lower, in terms of who I was asking. So, I would get I'd get a lot of hits like with people that would, grab coffee or whatever. As you go up the food chain, and you kind of learn like, oh, I want, kind of the hitters in a certain pocket or whatever, right? Like those things get trickier. But going back to the sales analogy, it's like being okay with being told no, like being okay with rejection. It's like it just doesn't matter, like just make the ask. Like, and that's the one of the huge things I just say over and over again is like if you see somebody that runs some big fund in your region, or if you know somebody that personally has a huge portfolio, or somebody that's living their life, pretty cool, and you're just curious, like literally just asking them like, hey, can I spend time with you and just like pick your brain? Like, you seem like you got a cool life. Like it's literally that. And like a lot of them are like, what? Like, yeah, totally. Like it's almost catches them off guard just with like this extreme transparency that like I don't really have an agenda here. I just want to get to know you and see what you did right, and learn from you. And it's very effective. Like it's very rare. And if somebody says no to that, you probably don't want them anyway. It's not somebody that you're probably going to learn a ton from anyway. So no big deal.
That's true, and I've been guilty of this just because I wanted it so bad. There's people that I really wanted to be in the rooms with, but they were very busy, and I was very very pushy and trying to be, hey, like I'm here, I want to learn from you, and they were like, but these people are busy, and you need
Yeah.
someone who is, if you're looking for a mentor, who has the time and the bandwidth to empathize with you and not just shoot off an email, whatever, be very passive in their mentorship. A mentorship is someone who is a good mentor. Great mentor is going to be someone who's going to be very invested in you, believes in you, takes time with you. And yeah, you need to be okay with the rejection. And I was like, I have about 1,000 or it's zero. I had that
Yeah.
perfectionist mentality, and that held me back for a while. But I agree with you that you said, people want to help. Business people we've all been through a lot, and so we empathize with people who are getting started. And especially when you're young, that naive energy is infectious, and that was something that I always had, and people really
Yeah.
appreciated, and I believe you did too, right?
Oh man, I want to say I hope I never lose it, right? Like it's that just desire to like absorb and be around like other people doing stuff. Like I was on this other podcast the other day and it was a random question. They threw this big curveball at me and the guy's like, if you started your own podcast, like what would you call it? And I was like, like super interesting, and I just immediately thought of like interesting people doing interesting things. Like that is a thing that I would probably do just because I'm a deeply curious like people person, and it's it never ceases to amaze me just like if you just ask, and if you're and I do think there's something about being confident enough to ask that is really good, that not a ton of people have. But usually what I found is like the men and women that you would pursue as a mentor, they're doing something cool. At least my experience has been the ones that are truly intentional and like probably have a point of view that you want to learn from are carving out time for this already, or like it's part of their ethos, like it's part of their like what they want to be doing is giving back. And the people that are running around with their hair on fire that are already at a certain level are probably, like something's probably a bit off, in terms of like their model or what they're doing, or like and that's not the energy that you want anyway, is like somebody starting over, because it's like frenetic. And so that's something that I've been doing. So I just turned 38, so I'm transitioned now from the young guy to like the uncle, like I'm like in the middle. And it's been so fun for me because now there's these 20 somethings that are coming to me now and they're like, hey, like, can I get coffee with you? I just want to pick your brain. And I'm like, oh, this is so cool. Like it's like this, but I love it. Like no matter, and we're at, I mean, arguably the busiest season I'll be in business. I mean, we've got a good little thing going, but we're scaling it, right? And so it's like there's so many things happening. We're not big enough to have like delegation abilities across the board, so I'm wearing a lot of hats. So is my partner. Like it's a really busy time, but I mean I say yes every single time, like, and I love it. Like, and it's amazing to give that back. So I don't know. I just make the ask. Like
No,
that's the takeaway.
I love that. And I could talk about this subject all day, but we do got other subjects I want to touch on. In your business and in your life, was there a pivotal moment that you feel really catapulted you forward into where you are now, or that gave you that kind, broke the glass ceiling where you were at before?
I can kind of think of a few. So I got into this to buying these apartment deals, but in my head, I was still working in my W-2, so I wasn't that focused on cash flow. I was just trying to multiply equity, and that was our model. So the second that the deal kind of 2x its equity, we 1031 the thing and roll to the next one and do roll to the next one, and I ended up 1031ing, from 2010 to 2023, I guess. Like $250,000 into like 10 or 12 million dollars in equity, like just with my own money and small groups of family and friends money, but we were not raising LP money, we were not doing any of that stuff, and so it was just this kind of really interesting thing because when you're young, there wasn't actually like cash in my hands, right? Like it was equity in these deals. But I'll never forget there was this time, probably like 8 years in, where I was talking to one of our banks that we do debt with, and they're like, hey, you could do a cash out refi and pull, $2 million out of these three buildings, like on a cash out refi, keep like 40% leverage in the things. And I was like, what? Like, and it just like hit me in the face, like, holy cow, like, this is the thing, like this is the business. And it was so funny because I had been self-managing, I think we had 50 doors or something, but I was like collecting checks and collecting quarters and, like doing everything, getting the phone calls at 2 a.m. and selling stop, like it was just like such a fun but like crazy time that I'll never forget that because it was just this like in the face moment where I was like, all right, we gotta like focus on this more because it's a real thing, like it's amazing. And then second of all, I would say when I finally quit software life, so that was like a year and a half ago or something. That was a huge, like, scary thing. Like, even though we already had a pretty good base, like, and like these things were already going, and financially that's a good security, but being the first in my family to not have, like a paycheck was a huge thing. But again, going back to those mentors, like it was them that these guys who, are big, very successful guys were like, you should have done this 5 years ago, and they were in my ear for 5 years, like telling me to do it, and I didn't see it, I didn't get it, it didn't make sense to me, and then finally when I did, and I got freed up, like massive shift in everything. So those two moments are like kind of burned in my brain for sure.
That's incredible. And I still think it's absolutely wild that you spent as much time as you did in that corporate role with everything that you had, all these assets that were, building up, and you had all of this on the side, and you only left just a year and a half ago. And how did it feel to take that leap? I know you said you were scared, but is there feeling of freedom now, or how
Yeah.
would you advise other people that are in that space to take that leap?
Yeah. I think that there is beauty in, I'm not the guy that says send it, like just send it no matter what. Like that's not where I'm at. I'm pretty like calculated. I think once you have those some proof points, you should. I think doing something on the side is a good way to figure out what you want to do, like, and I have a few other things in my past, for 8 years, I ran a company and owned a piece of a company that sold burn simulators to like the Department of Defense to train firefighters. Like that was another thing that was in the stack. Like I just was deeply curious about money, right? Like trying to figure that stuff out. I learned like that type of business, like running a business like that is not for me. Like it felt like another job. So I think figuring out what you like on the side is smart. Once you have a model that's kind of proven and you could see it like scaling, just send it, and to go in because that level of like mental gymnastics when you have multiple things going on is hard, and it's unmeasurable. Like it's impossible to really truly see. Like you could say, hey, I worked 6 hours today on this thing and 3 hours today on this thing, But what about the other 17 hours in the day in terms of what's going on in your head, like trying to remember what to do and manage all these things and have all these gymnastics going on. It's just hard, and so I think getting kind of racing to a place where you can go all in on something is smart, but taking your time to get there is also smart.
And so how are you managing your schedule and your workflow and everything in your business? Because I can't remember if we talked about this on the pre-show, but I had organized everything that I had to do in my businesses and in my life and everything. And I kind of dialed everything out. Okay, all the subtasks to make everything successful, daily, weekly, monthly. And right now they're sitting 123 tasks that would, if I can be perfect, it'll be 123. That's all the way through. So I dialed everything out. It's maybe I need to simplify that. So I'm still in the
Yeah,
process of that. But for
yeah,
you, somebody who's got this already dialed in or is doing a good job of
yeah,
it, what are some of the things that you do to
yeah.
remain successful, stay on task, and keep everything moving forward as it should be without having to leapfrog everything forward?
Yeah, so this is a topic that I could probably spend like 6 hours talking to you on, but I think it's fascinating, and I don't have this polished. So like we'll just go off the cuff with it. But I do not believe in having like a really aggressively fleshed out like 1 year, 3 year, 5 year plan for the business. Like having a business model that's super fleshed out, totally different. Like that's not what I'm saying. Like understanding what you're doing as a company and what your focuses are, of course, like you need to be dialed in there. But in terms of plotting out my future, I'm not really a gigantic believer in that. Just because I think it limits you, like, especially if you're capable and you have this ability to pour gas on something. It's like, how much gas can I pour in this thing? I don't really know. Like, is my acquisition target $20 million this year? Is it 50 million? Like, what if we find a capital partner that wants to slug us a bunch of money and we could do 150 million? I don't know. Like the deal flow's there, the machine's built, like we could do it. So I'm huge into like staying in your lane, staying really focused, not going around like for example, Veritas. We buy the exact same type of deal over and over again in some really specific markets. Like we're not deviating from that. Like we're not going out and we're doing construction projects. We're not doing monster value add projects. We're not doing any development. We're not doing any conversions. We're not doing any of that stuff. So I know our lane, we're staying in it. And I just sort of bite off like a quarter at a time. Like that's where my head's at. So like I know I should be spending as much time as I can with potential investors. Like I know that I need to be spending at least, I don't know, a third of my time to half my time managing our existing assets. Like that's super important. Like, I mean, we're nothing if our deals don't work, right? So, like, it's not all about investor money. It's not all about acquisitions. Like, we have to run our stack. Lately, in the last 6 months, we've been building kind of the infrastructure to be able to delegate a lot of this back end stuff. So, I probably spend at least 30% of my time now on like understanding what's possible in terms of like continued and further kind of mechanizing of like what we're doing on the back end, like the property management piece, the bookkeeping piece, the financial reporting piece, like all of these things. So like now I spend my time as much as I can doing those things, and I actually spend the least amount of time with like potential investors and stuff. Because I mean that the money's going to come. I just want to make sure the deals work really well and everything's happening on the back end like it should. For example, our K1s were out third week of January, like to all of our investors. Like I just want to be that group, that like everything is dialed in along the way. But yeah, little things. I started blocking Tuesdays off, no outside meetings. Like I just blocked my calendar. And like Tuesdays, I know for sure I have all day to catch up on everything admin. Like, and that's been awesome. That's a new thing. Like I started it in the last month. But so little things like that. And I don't know if you got any tricks or something you could talk about too, but I'm all ears, in terms of like making that work better. But yeah.
Yeah, I mean, like I told you, I'm just trying to break everything down. I think the key for me at least is visibility in everything that I have to do, because if it's not in front of me, just because with how much things pop up, business, life, everything, it's so easy just to lose everything in how busy you can get. And so for me, I'm just trying to make everything as highly visible so that I can say, okay, got that. Okay, let's plan for that. Let's move this over here, and just make it to where user friendliness in a software is very important to me. I'm trying to get away from the Google Sheets and stuff like that. The Google Sheets is fine, but I'm trying to see if I can overcomplicate and then simplify everything, just because everything is so overcomplicated these days. But that's what I'm trying to do.
Yeah.
I'm trying to leverage software and AI as much as possible, figuring out how to automate and systematize things very early in that process. But if I can get to that point, that's going to catapult me much further than having to do everything on my own. Cause it's just me and a couple friends and business partners. I don't know how big is your team? Do you have other staff members?
Yes, I mean, we have a few people that are riding with us full time, and then we have a ton of partners, so I don't know that number. But I'm really big, like you said, just keep it simple, stupid along the way, like every single thing I possibly can, we're trying to do that. There's also just a lot of groups out there that are super talented that, they have these systems kind of down and they're, offshoring things that they know how to offshore and I mean, it's really reasonable. So like, this is again, like the fascinating part about how to like scale a modern business. It's like you don't have to hire a full-time employee anymore to do the one thing, that they might actually only need 5 to 10 hours a week to do. There's just so many solutions out there. So, that's my partner Lauren. She is spending a lot of her time. We kind of think of it as like channel, and she came out of software as well, actually came out of AWS too. And her thing was all channel and partner engagements. And so we're trying to think through this almost like a software business, in terms of like, how do we do that? How do we create the similar structures that we're used to seeing in our past lives, but with real estate? Because, real estate just, it feels very archaic in a lot of ways, like there are tech solutions out there, just not many groups are using them, and so vetting them out and making sure we know how they're going to all work together and if the integrations are all going to work together and all of that. We do have a bit of an advantage, like coming from that world, but there's so many ways to extend your team, really, really reasonably these days. It's awesome, actually. I think it's a great time to be doing this.
Yeah, and I like that you said you're replicating a lot of the skills and models that you learned in the tech business because
Yeah,
it is very organizational tech companies, and that's the approach that I've started to take in the last few months as I've kind of just started rethinking everything in my business. I've started telling people, I'm a tech and marketing company that specializes in real estate.
there you go.
And because that's all the stuff that moves everything forward. It's the tech and it's the marketing. The real estate I have down, and that's fine. That part is figured out. That works. Everything else that facilitates that and makes that grow is the tech and the marketing. And so I've kind of just taken that mindset shift and started to implement those things from other companies, bigger companies, because those are the ones that are able and have been designed for growth for so long. Whereas real estate, like you said, has been very archaic, and there's so much new technology and software that is just growing exponentially. Even the softwares that I got in January, they've iterated 4 times and they look completely
Hmm.
different
Yeah,
than where they are now. But
for sure.
to move on from this, and like we could talk about this all day. I love this subject.
Yeah,
But
yeah,
I do would be remiss to not talk about any of the real estate on this podcast. So,
of course.
what was the last deal or the most memorable deal that you've done that you can talk about, and kind of just give us what that cycle has looked like for you, what challenges, what was the property, things like that.
Yeah. Um, I think this is if I could give advice to anybody like thinking through how to scale a real estate business, like finding a thesis that is really simple to explain to potential investors and partners. That's been a huge advantage that we have is, and I know there's other groups that are doing this. It's not like we're the first, but um, we only buy this exact same kind of type of deal, right? So like if you like one of them, you probably like all of them. It's workforce housing, it's median rents, it's 70s, 80s construction, it's Pacific Northwest, certain zip codes in the Pacific Northwest, like we're really specific. It's $3 to $10 million acquisition price. It's 15% margin on rents. It's like literally like you could just go down this punch list and we're doing the same thing, rinse and repeat. So like I smile because like the last 5 deals we've done probably, yeah, I'd say 4 deals in the last year. They all look almost the exact same, and it's if I've done 25 total deals or something, like in my career, it's there's just not that much variance in them. So it's like the last one we closed was a 33 unit in Eastern Washington. Um, that one was kind of memorable because we partnered with a bigger capital group and they brought all the money and that was really cool. Um, but the partnership there is different because they're so dialed. Like just from like an institutional level, that was probably the most memorable because it was the hardest in terms of like underwriting and pressure testing the deal and being vetted and like all these things. But it was a really cool experience to go through because we learned a ton. We also got some good proof points that like what we're doing is good. I mean, these guys have $800 million in apartment deals in the Southeast. So, they've been traditionally investing down there in that part of the country, and they want to start moving their money more to the West Coast and in the Pacific Northwest specifically. So not only were they have a team of analysts and, like all these people that are at their disposal to kind of beat up the deal and shred it and like try to find problems and all these things. So it put me in this really good space of like, okay, I've got to like come with the data, right? Like that I'm kind of just used to spitting off because we've done this so many times. But also I had to kind of educate them on the market, which was cool because, they know this area. They actually live here, but they've been buying down there for the last 15 years. And it was just a fun process to learn demographics, more demographic data, just get way more granular and actually, end up closing the deal. We bought that one in December. But that was probably the most unique just based on the way that we bought it.
And so, what were some of the points that they were trying to um, eke out of you? Because I mean, they're really ringing every partner as thoroughly as they can to figure out, is this somebody that we can trust with our money? What were some of these, more complicated questions and issues and data that they wanted from you? And was there anything that kind of tripped you up or caught you off guard? And how did you handle that? But yeah, I'd love to hear more about the details on that.
So it was fun because I get so used to like this flow, right? Of like talking about why we buy, where we buy, the type of deals we look at, like defending the rental data, like, and it's cool. Again, the real estate business versus something like a tech startup or something. Like the data is all public. It's all there, right? I mean, you can look at rental data. Anybody can find that. If you get even remotely curious, you can look up all the numbers yourself. Um, I mean, everything down to the prices that deals have traded for in the past, right? Like you can find all this stuff. It's not there's no mystery as opposed to tech where you're like having to kind of paint a vision and tell a story and like it's just a different deal. So with these guys, it was a little bit of that, like, hey, like this is like Washington State is I think it's one of the best in terms of like rental economics in the country, around population growth and I mean, just bulletproof workforce housing needs and like all of these things. And our economy is so strong here just because we have, the Microsofts, the Amazons, the Boeings, the Googles. I mean, everything's here. So there's just a ton of like $600,000 a year households. So, the rental market is just super needed because housing is so expensive. So that part wasn't super complicated. I mean, the data's all there. We talked through it. The part that was really interesting for them was the underwriting. So, I had an underwriting model that I had been using for, about 5 years, I would say. And, it took into account everything that we needed. Inflation was baked in, cost of goods increasing was baked in, like all of our CapEx and OpEx stuff is in there. The debt was in there, like everything that you would normally desire, like in a model to underwrite a deal was there. These guys, though, like for example, they want month to month forecasting for the whole 5 year run of the deal. And so like every single month by unit, like it was, so, 33 units, not a huge deal, but it's not a 4 unit either. Um, needing to go, and I was like month by month, like by unit, like holy cow. Cause like I was kind of used to talking about, aggregate. I know our OpEx ratios. I know what these things are going to end up being. I know what our rough renovation plan is, how many units we're going to turn over the course of 6, 12 months, whatever, right? Like, but it's a bit of an art and science, and like, and that's this business, like, but these guys were like, we want to know month by month, like what the plan is. And I was like, holy smoke. So I actually had to like hire an Excel underwriter that was like a professional Excel guy, to like help me build a new model. And, we went from like a four or five tab, like very functional. I mean, it worked for us for a lot of years model to this, like, I mean, I want to say it's approaching 20 tabs, with hundreds of lines and like all of this stuff. And so like I had to learn that, and so it was when we talk about this up leveling thing, when you go up the food chain a little bit, like you get squeezed and you learn a lot and come out better. Like that's what happened here. And I wanted to pull my hair out a few times, like throughout the way, just because I was like, holy cow, like I'm having to learn basically like super advanced Excel modeling here, like instead of like focusing on the deal, but like I mean, it all panned out. Um, and now it is really cool. Like we've owned that deal for, 4 months. So it's still like a new deal, but every month I go in and I have a whole process now and I go month by month. Like how did we perform versus our forecast, on expenses, on revenue, I mean, all of the line items. And you could see like, where did I miss? What did I get right? Like what's the NOI looking like? How's it trending? And so it's just, I mean, it was a huge up level in terms of our whole process.
Yeah, and there's for anyone that's looking to learn more about that or would like to have some resources on that, there's a website called Adventures in CRE that is very, very good. They have a lot of educational material on modeling, underwriting for just about every single asset class out there, all the way up to I think private equity and in business acquisitions. But that one's really good, and they even have a Excel modeling course that I took way back in the day when they launched it, and it is hugely valuable. But they do have free Excel models that you can download, and they do have some that are delineated so much that you can do it month by month on those tabs. So that's what that reminded me of. But if you're
Yeah, yeah.
looking to get some resources on that as the listener, yeah, go and check that website out. I utilize their stuff quite a lot to help build out some other Excel models when I run into an issue like that. But yeah, do you think that month by month you're able to track more data? Right, you're able but on an anticipation scale, assumptions. Do you think that's a little bit overkill? Just because there is so much that can happen that isn't predictable, and that will pretty much throw off any assumption and model that you made, especially when you're that granular.
Yeah, I think it depends on who your partner is, going back to that partnership thing. So this is just their flow, right? Like, and these guys, I mean, they've raised 250 million bucks from investors in the last 15 years and, again, have a humongous portfolio. And so they're used to needing to, and their background also is like CFOs of big companies. And so, they are financial people. So it makes sense to me. If the expectation was you better nail, the forecast on each of these buckets, no, like, no, it wouldn't make sense. Like, as an example, I just wrapped up Q1 and like we were behind on revenue in terms of like what I forecasted, but that's because we turned, you know, 5 additional units than we expected. So like now though, coming into this quarter, we're going to be way ahead because we're going to be like 12 months ahead of our pro forma, because we did it quicker, but revenue was lower because we turned more units. So it's one of those things where if you have somebody in there that's just going to look at it like annihilistically and be like, hey, you missed the revenue projection and doesn't understand the business model, that's problematic. But I could come back and say, hey, we missed revenue, but like our OpEx was actually 12% lower than we had anticipated. We're 5 units ahead of the rehab plan. And here's what it looks like the rest of the year. And we're going to be at like month 15, at month 6 or something in
Yeah,
terms of our projection. So, and they get that. They got it. So they're like, oh, cool. Like that's great. So I think if it's directional, it's okay. But, scaling, it's tough.
yeah, and I really like that approach. Just like I said, for the tracking and to be able for especially for reporting to back to investors. Investors love to see that, hey, here's where we were looking, here's where we are, here's where we worked, here's where we didn't. So I like it for that aspect. Switching over to the marketing and the deal sourcing side of things, what does very quickly, I want to get through a couple
Yeah.
more questions before we're
Okay.
out of time here. But for your deal sourcing and marketing, what does that process and system look like for you?
Yeah, for us, that's probably like our biggest competitive advantage in the space is just all the relationships that I've built over the last 15 years in our markets. So we've never bought anything listed. We never will. Our deal flow's kind of off the charts. So, we're getting 5 to 10 deals a week passed to us that pretty much all hit our underwriting just because these brokers and families know what we buy. So groups bring these things to us because there's not that many groups buying at the level that we are in this space, in those size of deals. So it's usually families that, we have relationships with that have owned these things generationally down the line. The brokers in the area that do these things, they know if they have an owner that's kind of tentative to like list, but probably wants to sell, we'll get a conversation going that way. But it just took a lot of years and reps to like build the relationships.
Gotcha. And for someone that's starting out and doesn't have those relationships established, and whether it's a not competitive market or a very competitive market, what are some tips or tricks that you would advise to start getting into either the off market stuff, straight to
Yeah.
seller, or broker relationships?
If I could go back in time, I would find like me, like when I was 22 and just partner. Like I would just try to hitch my wagon to somebody doing it that's in the game that already did all the gritty stuff, to get to where they were, provide value to them for as long as I could. Maybe that's a forever partnership. Maybe it's like 2, 3, 4, 5 years, whatever. But that would be what I would do if I could go back in time, and I probably would have shaved 10 years off this game in terms of where I'm at. But that's what I tell everybody that tells me what would I do. I'm like, find someone like me that's still building, still growing, still kind of aggressively getting after it, but like has a base and the relationships and all that stuff that you could draft off of.
Yeah, and I couldn't agree more with that. I mean, that's how I got my start. I had my relationships with owners and operators, and when I wanted to take the jump into this space, that's what I did. I partnered with a developer. I had some investors that were ready to go into the space, and so I just put one and two together and maintained that relationship, and I've learned a lot from it, and have continued to do that
Yeah,
over and
it's
over
awesome.
again.
It's smart.
Um, for you in managing your team and contractors, what does that framework for managing others look like? Because that is probably the other most difficult part of the business is managing people. What are some of the
Yeah.
things that you do to keep people moving forward?
I think that goes back to the very beginning of the relationship in terms of that expectation setting. So, we're super clear. If I can be one thing across the board, I want to be clear, with everything. Like I don't want anybody to be confused. I don't want there to be any gray areas that somebody's unsure what I mean or what we're after or what their role is. So I think that starts from the beginning. Like if we're wildly clear about, hey, this is your lane, this is where you're going to swim, like let us know if you want to swim out of it. Let's figure it out, like happy to grow with you, but for now, this is your thing. And I will say, like, as deliberately as I'm not even going to look at the emails on this chain, like, I trust that you got it, and does that mean I don't actually look at them? No, usually I do still, but like, I want the expectation of somebody that I might not, like, and I might be busy and I can't be like over everything all the time. So if we're going to trust somebody, we give them freedom, like we give them that ability to go do the thing, and we let them go. And I remember a boss I had in software sales because you're remote, so like I was 22 years old, didn't have to go into the office, was out in the car, selling payroll by myself all day. And this guy goes, "Hey, we're going to give you a lot of rope, and you're either going to run free or you're going to hang yourself, in terms of freedom." And that's kind of the motto I've always had is like, we're going to give you the trust and the flexibility and the autonomy first. Like you don't have to like grind to earn that. And if it doesn't work, it doesn't work, but usually it does. It's a good thing.
I love it. All right, last quick fire question. Resources, tech stack, things that you use on a day-to-day basis to supplement your business, stay in the loop with market trends, software that you'd like to use that saves you a lot of time. What are some of the things that you swear by? Anything that you would recommend for people to check out?
Man, I'm not really, this is like a newer thing for us to be getting out there and like doing marketing and all of that stuff. So, lately I've been leaning more into LinkedIn and I find that it's been about 3 or 4 weeks that we've been more kind of heavy on LinkedIn. And that algorithm seems to be tailoring now, like the updates that I get and the articles that I get surfaced to me and all of these things to be much more specific to what we're doing. So, and also just some wonderful conversations that have come from it, just getting out there. So I think LinkedIn is great. Tooling, there's a bajillion tools out there. So like I think it just depends on what you're doing and where you are. Like the data might not be that good from a certain, real estate information list provider in Texas that it is in Washington. So I think that's super like regional. I would say it's not so much tooling, it's about people. So, we just really invest into the brokers that are doing all the deals in the area. Residential brokers are huge partners of ours just in terms of client referrals and co-gps on deals and things. They'll find deals and we'll bring them in. I would say just local events, keep it local, keep your name out there, keep your face out there, and just like meet as many people as you can and then figure out the tooling specifically for what you need after that.
I love it. I love it. And then last thing, what is the last big piece of advice that you'd like to impart on the listeners before we take off?
It makes me sound like I'm about 70 years old. So I think it's critical if you're going down this path and you're going to try to build something to be wildly intentional about building it and having fun along the way. Like I don't think always being obsessed over the money or the end or, like where you're going to be. Like I think it's important to have a plan and, know your why and all of that stuff. But I think every single day being super intentional about carving out like as much or as little time for the business as you need to be happy and like feel like you're fulfilled and like doing the right stuff is probably more important than anything. Like just because if you're on brand, and you're fulfilled and you're also fulfilled in other aspects of your life, I just think the rest of the stuff just flows better. So I would say just not to over index on every little thing and to keep in perspective and have fun along the way. And as simple as that sounds, like it's super hard, like to do that. So just thinking about that every day is really what I'd say.
No, that's perfect. And I love that advice. And I think that's as good a place as any to wrap this one up. So, Alex, seriously, thank you so much. It was an honor to have you on. Pleasure. Thank you very much for being on today.
Oh, this was great. I feel like I want to have a podcast and flip it on you and ask you all the same questions. So
I would be more
yeah,
than
we should do
happy to
that.
come on. I would
Yeah,
appreciate
yeah.
that.
No, I love it. That was great. Thank you.
All right, guys. Well, this has been the latest episode of the Mastering Commercial Real Estate podcast. I'm your host, Cory Mortensen, and this has been Alex Burch of Veritas. Alex, thank you again. Listeners, have a wonderful day. Well, that's a wrap for today's episode of the Mastering Commercial Real Estate podcast. Thank you so much for listening. If you enjoyed the episode, go ahead and give it a like, leave a review, or share it with a friend. It really helps us grow and reach more people who want to master this space. If you have any feedback or ideas to improve the show, reach out, leave a comment. I'm always looking to make it better and tell us what you like or didn't like. And don't forget, if you're ready to start investing passively and want to learn more about upcoming commercial real estate deals, head over to ONE-9 Holdings. That's 19 Holdings, and join the investor list. Thanks again for listening, and I'll catch you on the next episode.